Hello team, David Rutz here with David Allen Capital. We're going to talk about DAC payment processing compensation. As with all services, once you know the residual revenue and you can grow that, you can maximize your income. But all statements are for mathematical demonstration only. No income is earned unless what? Customers are acquired. Of course, common sense we know. Well, determining income with all DAC residual services, you first need to know what the residual revenue is. That's the amount of money DAC earns monthly on the service. Now that varies each month, of course, but you then multiply that by your commission level, which is anywhere between 20 and 50%, and we'll show you that ladder here in a minute. And you multiply the personal residual revenue for the month times your commission level for the month equals your income, of course. Now with payment processing, it can be a little more difficult because we can only estimate residual revenue up front because it varies month by month by the client type, their sales, the amount of sales they do, the credit cards they receive, the number of transactions they have. All those things play a part into the profit on the account or the residual revenue. What we can say though is, for kind of forecasting, dual pricing clients will generally be about 0.75% of the monthly processing volume. Now that's once they're doing 10,000 or higher, right? Less than that, it's going to be lower. But and in standard processing is only going to be about 1/8% of monthly processing volume, about 6 times less. Why? There's just not near as much profit in the standard processing. Again, you earn 20 to 50% of that personal residual revenue each month. So let's look at the ladder first, the 20 to 50%. Maybe you already know this, we'll just go through it quick. You get a base commission of 20% residually, and then you can get bonuses up to 30% to get to 50% total, all right, of the monthly residual revenue. So your commissions grow as all of your customers combined, total residual revenue monthly grows. So you all get 20% base commission, but once all your customers combine equal 400, you get a 5% bonus, you'd be at 25%. And as this grows, once you're at 2,000 monthly residual revenue between all your customers, you get a 30% bonus, so you'd be at 50% total, all right? Now let's use an example here of a small business only doing $10,000 on dual pricing. Remember, we already established the average should be about 0.75% of that 10,000 would be your residual revenue, about 75 personal residual revenue, all right? Your base commission is 20%, you'd be making $15 a month or about $180 per year for signing that customer up. Now, if you had more customers and you're higher up the ladder, you'd get more than 20%, but let's just say this is your only account, and because it's below 400 residual revenue, the first rung on the ladder to get a bonus, you remain at 20%. Okay. Now let's look at a larger client. Let's say you got a restaurant doing $160,000 a month in processing. Well, your residual revenue on average should be about $1,200 personal residual revenue monthly. Hey, that's going to get you up the ladder to the 40% mark, but base commission would be 20% minimum, $240 a month. But because you're over 1,000 residual revenue now, you'd get another 20% bonus. So you'd be at $1,200 times 20% bonus, $240, 40% total is, you had the base commission at $240 plus the bonus at $240, $480, or 40% of that $1,200, right? So you'd be making $480 a month for signing up that one customer. It's over $5,000 per year. That's pretty cool. So you want to combine all your customers together to climb up that ladder to get to the higher rank. So let's say you had 10 customers, some healthcare customers, a couple payment processing, and you got to 2,000 residual revenue, you'd be at the 50% level earning $1,000 a month. 20% base commission, 30% bonuses equals 50% total. Pretty darn good. So your key takeaways are dual pricing accounts will drive much higher residual revenue, which will give you much higher income. 100,000 processing as an example would be $750 residual revenue dual pricing, $125 only regular processing. Customers better off, you're better off. That's why we lead with dual pricing. You want to focus on growing your total residual revenue amongst all your clients so you can get to that 50% rank. And then as you retain and grow clients, keeping them active, it'll give you consistent income. Of course, you maximize your earnings by building and retaining a strong portfolio. This is on your personal customers. So again, you determine the personal residual revenue, you determine your commission level on the ladder, you multiply those two together, that is your income. So As it says there in blue, always refer to the comp plan details. It's this simple. This video is accurate as of today, but this could be a 5-year-old video by the time you watch it. So you always want to refer to the comp plan details to make sure you've got accurate information. The great news is this: you're helping clients and you get a percentage of the available revenue on the account. And it can be as high as 50% every single month for the life of the customer. Build your residual, build your freedom. God bless you all.